Hey, welcome everyone. I am excited today to welcome Nick Huber, one of the guys that's from my own domain of commercial real estate. So, welcome, Nick.
Rick, thanks for having me, man.
Hey, well, great to have you. Nick is the author of the forthcoming book. Actually, he's already out, Sweaty Startup. This is a book that I highly recommend. Those of you guys that know, I talk about barriers to entry and working your way into a high barrier to entry type of asset business. This is exactly what Nick wrote about, and so I want to talk to Nick today about his book and a little bit about his background. But first off, Nick, tell us a little bit about yourself. You know, where you live and how you got into the position to write a book.
Yeah, I grew up in Southern Indiana. I was lucky enough to go out for the track team in high school, and I quickly found out I was pretty good at it. I went to Cornell to run track. I got in Cornell because I could run track. And then yeah, I met my wife there, met my business partner there, Dan Hagberg, who junior year we started a moving and storage company. Learned a lot about operations, made a little bit of money. 2015, we realized it was not the business that was going to get us to where we really wanted to go. So we decided to build a self storage facility from the ground up. We raised about $500,000, borrowed a bunch of money, put a bunch of our own cash in, did about a $2.5 million deal, and opened the doors in 2017, and then kind of had that deal went really well. We refinanced out some capital in 2019, refinanced it again in 2021, and used the proceeds to go and buy a bunch more storage. And now we have a real estate private equity company with 63 assets, and we have uh, several other I'm an opportunistic entrepreneur. I own somewhere.com, a recruiting company that's fairly large, and then RE CostSeg, which is a real estate services firm, cost segregation studies. So yeah, it's a lot going on.
Yeah. For those that aren't aware what a private equity commercial real estate firm is, tell everyone kind
Yeah.
of explain what that is and
Yeah,
how
I'm,
you
I'm on the
operate.
small side. So I guess when you think private equity, there's a lot of very large firms who raise funds. We've raised about 40 million of equity to buy assets. And our model is we raise the capital, we charge management fees to oversee the actual asset, and we provide our investors a return, and we get a cut of the upside as those assets appreciate if we do our job. So yeah, we own 11 deals, 11 individual properties with no investors, and then the other 50 something are deals that we've raised capital in.
Okay, and are you developing these all, or are you buying some that are existing?
The first one was development, and we learned our lesson hard on development. We tried to build another building in Cortland, New York. We tried to build another one in Utica, on two different sites. So we were 0 for 3 over the next 2.5 years, and we invested a ton of money and time into developing more storage. Man, if there's one regret I have in my career, it's go back and start buying assets earlier. Because when we were doing this in 2017, 2018, 2019, there was a lot of value to be had by just acquiring and operating some of these properties. The competition for the asset class wasn't quite where it is today. So yeah, we built one and bought the other 60 plus, and then we've done a lot of expansion. So I think we've built 350,000 square feet of storage onto our additional properties, kind of expanding on the ground.
Yeah. I think that's one of the great classical moves with self-storage is looking for available either adjoining parcels or available space there. And then also
Mm-hmm.
automation, I imagine, is probably a big part of your strategy.
Operations is something that we learned that in the trenches, and I think real estate is not. And this is a controversial opinion, but real estate is not the best place to go build wealth. It's the best place to multiply your wealth, in my opinion. Like, it is the most capital intensive business in the world. Real estate private equity is the best business in the world, in my opinion. But you have to have the fund for the GP, and if you don't have any cash, it's really hard to do the co-invest. It's really hard to find deals. It's really hard to put that money on the line to go out and acquire and build your team. So we're very lucky we had that operating company first to produce a little bit of cash and mainly teach us how to operate. Because self storage, I mean, shoot, we got 15,000 units, 12,000 tenants. They got to pay rent every single month. They move in, they move out, they have problems. We have 45 people on our team that we manage every single day. So yeah, the operational chops that I learned in some of those early businesses have served me very well. If I didn't know how to run an actual company, everybody says real estate's passive. I promise it's not, and you know that, Rick. So
Oh, yeah.
yeah, our kind of remotely operating those properties has been our main competitive advantage. We have 5 employees in America, and we have 40 plus employees in South Africa, the Philippines, and Latin America who run our property management, oversee all of our vendors, do our collections, do our sales. So yeah, we're very good operators.
Walk me through your out, I guess your offshoring process. I know that you have a company that also does the same sort of
Yeah.
thing for other people, but walk me through sort of your philosophy. Like, what sorts of things are you pushing offshore? What things are you keeping close to home?
Yeah, I think when you think offshoring, you think, okay, you call the bank and you push three, and somebody in the Philippines answers, and they're going to help you, log into your account or change your password. Now, we do have a lot of very competent operations assistants who do very basic, repeatable tasks, but we have leaders of our company that are international. We have somebody who's our VP of operations in Bogota, Colombia. We have our head of sales in Johannesburg, South Africa. Our head of performance marketing and head of growth and helps us lease storage units there in Cape Town, South Africa. So, um, yeah, our head of finance, our acquisitions underwriters are in Egypt and Medellin, Colombia. So yeah, it's truly a worldwide company and not just repeatable tasks. These folks really know how to run businesses.
I think that I heard at one time there were more English speakers in the country of India than there are in the United States.
Yeah, that's partly because there's four times as many people in India, and almost everybody there speaks English. But yeah, it's the world is truly flat today. Like with the right technology stack, we use Slack and G Suite and Asana and all these different tools to communicate and set goals, set targets, set KPIs, and then performance manage our team to make sure that they're doing their job. If you can do that well and you can run a remote business, I have a real estate private equity company with 50 plus employees and my overhead is 1.3 million a year.
Wow.
My competitors in the United States who run similar size shops, 5 million, 4 million. I mean, you tell me. Like,
Easy,
yeah.
easy. Yeah,
So
yeah.
it's the last 3 years of real estate have been very difficult for everybody. And if I was financing a full US based team, I would not have survived. I'll tell you that.
Yeah. Well, I think we're seeing a move here in Texas with a lot of family offices going into the private equity space, then raising capital from their other friends that are also family offices. And
Mm-hmm.
my business in the private equity space, we started with 11 family offices coming together,
Yeah.
and then I got sidetracked with the whole thing where I've got to have my own family office as well. So I got to set that up, but then I was just investing in my own projects, and it didn't make a lot of sense there. But so where are you at? Because I think a lot of guys that are in your shoes, they're kind of looking for establishing that family office for themselves, and that kind of gets a lot of us distracted. Like, what is sort of your thinking right now? Where are you on that spectrum?
So we got our hands on that first asset that we built in 2017. Bought the neighbor across the street in 2018 in a very small property in Pittsburgh, Pennsylvania in 2018. Bought a couple more really small properties in 2019. We didn't really start to go and grow until 2020. Bought a lot of storage, 30 million in 2020, 50 million in 2021, all on 3-year debt. By the way, we can talk about that, floating debt, um, when interest rates were 3.75%. But we've never sold an asset. I never
That's
sold.
impressive.
I mean, we've had some refinances that have put some cash in our pockets. I own a big chunk of somewhere.com. That's a big company, 170 employees. I own a big chunk of RE Cost Seg. Those are both developing companies, but I've never sold an asset. So I don't have the liquid 10, 20, $30 million net worth that I would consider where it gets, cost advantageous to hire a team to help you manage that money and a finance team and underwriting team and start to look at your own deals and do the things that a family office does.
Okay. The fancy term for that, I think, that I always hear is I've not had a liquidity event yet.
I
Yeah.
hope to have a liquidity event, but now is not the time to have a liquidity event in the real estate world.
Yeah. Oh, that's right. That's right. Yeah. Yeah. We talked a little bit about that before we jumped on the air.
Yeah.
And I would say comparatively, I haven't really had a liquidity event either. So
Hmm.
I kind of think about that. I look, if you're in the space that Nick and I are in, that you're looking around, a lot of people have a lot of resources, and they keep having these liquidity events, and you're kind of looking like, when's my turn for for that sort of thing?
I
But
think it's a crazy business because people ask you, or me and my wife will sit down and we'll say, okay, what is our net worth? and we'll talk about it for 20 minutes and we'll say, okay, we have no idea.
Yeah.
I think this portfolio that we spent $100 million on, I think it's worth, in today's market, if I had to sell it quick, 120 million, but someday it's gonna be worth 200. So which number do we count?
Yes. Oh yes. Oh yes. Yes. So walk us through, I've got a lot of guys that are sort of 25 to 45. They haven't done anything entrepreneurial in their life, but they're interested in that. Walk us through sort of like where you'd be looking. I know you've got a famous list of businesses as well that maybe you could
Yep.
mention, but walk us through like how do you get started in sort of building I guess multi-generational wealth track.
So I think and pick up a copy of the Sweaty Startup, because this book is written for me when I was 22, 23, in those early days of starting that company. And it's frankly a bunch of reminders to myself today of how to be a better operator, how to sell, how to think about the strategy to grow. But to be successful in business in a big scale, and we're talking about family office. I know, Rick, you've been in business for a really long time. To be in business to do it at a high level, you need three things. You need a network, people to work for, people to work with, people to be your customers, people to invest with you. You need cash. People underestimate how hard it is to do business when you're broke and you don't have any money coming in the door. It's hard to hire, it's hard to market, it's hard to build a brand, it's hard to invest. And the last thing you need is operational chops. You need to know what you're doing. You need to know how to lead people. You need to know how to hire. You need to know how to manage, to sell, all the things that you have to do to run a company. When my phone rings, it's not good news, right? It's not a customer calling saying, "Hey, Nick, everything's amazing. Just thank you so much." Or it's not my best employee saying, "Nick, I just wanted to call and say thank you so much for my paycheck hit, and I'm really thankful." No, it's problems all the time, and you need to learn how to be dynamic and make decisions all day. So that the first business that you start should be about developing those skills. You're developing the operational chops. You're gathering the money. You're building your network. You're becoming an expert. You're becoming worth knowing. So I think a lot of people try to get ahead of themselves and say, okay, I need to start that $1 billion company. I need to invent that new thing. I want to go build a real estate private equity firm like Rick. I want to do all these really big things. People don't realize that, 8 years before I built that first building, I was in, carrying boxes up spiral staircases in my moving company. So I would encourage people to start really small. And you mentioned the list of businesses. The most visited page on my website is a list of 200 plus, I think it's 300 plus business ideas now. And if you go to sweatystartup.com/ideas, you can download that list. And it's just a bunch of boring, bootstrappable, sweaty businesses that can lead to bigger and bigger and bigger things.
Yeah, yeah. And so we're looking for things that don't have a lot of capital commitment, and things that I guess we can learn operations. So are we looking for, I guess, a heavy operation, like operation centric type of business model where it's going to
It
be tough to,
depends. So my first question for somebody listening would be, if we're sitting here having coffee and I'm mentoring a young entrepreneur, I would say, okay, how much cash do you have access to? And it's a very uncomfortable conversation. Like, okay, how wealthy are your parents? How well networked are your parents, basically, when you're that age?
that's right.
Because you're in college or you're just at the beginning.
Yeah.
You don't
Or what
have
or what college is it? That's a big question.
exactly. I didn't have that network, even though I was in the Ivies at Cornell. So, but some of them do. Like some of the networks that you start to run in is a little bit different. But yeah, like if you have access to cash and you have an entrepreneurial family and you have a very, you know, that advantage, and I don't think there's anything wrong with having that advantage. I hope to give it to my children someday. But if you have that, then go ahead and start a real estate private equity company. Get into one of these bigger, better businesses. But if you don't, focus on the three things and trade your time for money. Now, that's not the advice you're going to get from everybody when it comes to entrepreneurship. Start by trading your time for money and then trade it for $25 an hour, you're making 2 or 3 grand a month. You can live. Trade it for $30 an hour, trade it for $50 an hour. Then all of a sudden you're making 5 or 10 grand a month trading your time for money, and you can hire somebody, you can afford to pay some people. Next thing you know, 3 years down the road, you got a business that's doing $2.5 million a year of revenue, and spitting off a couple $100,000 a year. That was kind of my story.
Yeah, yeah. And the only way that you get leverage, you got to be able to hire other people. And so when you hire the first, I don't know, for me, it was always like the first 5 or 10 people, you're losing money by doing that because that's work you could be doing yourself.
It's so hard. that first hire is the most uncomfortable part of business. Like it's easy. Well, it's hard work. I'm not going to downplay it, but it's easy to go out and do the work yourself. Just you stop working, you stop getting paid, but the expenses stop as well, right?
Yeah.
And when you make that first hire as an entrepreneur, it's super uncomfortable. So I love hiring a back office person in the Philippines or in South Africa or Latin America, right, for $800, $1,000 a month.
Yeah. Yeah. You have a disproportionate emphasis on sales. Like you say that sales is the foundation of every business. Kind of walk us through that, and what sort of sales related skills should we be like should we have in mind as we're developing sort of our business prowess?
So I had a pretty life changing interaction. The trajectory of my life changed. I didn't know it at the time, but I was just starting my business. I was confident. I was an entrepreneur now, right? It was 2011. I was 22 years old, and Storage Squad, my first company, was in its infancy, a couple weeks old. So the first thing I do is like, okay, I'm an entrepreneur now. I'm all in. I'd never studied entrepreneurship. I had never been, one to watch Shark Tank or, go on TechCrunch or try to figure out what next big trend was the thing to start a business. I think that's a blessing, by the way. But I sent an email to the head of entrepreneurship at Cornell. His name was Dan Cohen. And I said, hey, Mr. Cohen, like, I'm an entrepreneur now. Can I pick your brain? And it was a really bad cold email. I wouldn't have answered it today if I would have sent that email, but it was his job. And he said, yes, let's get coffee. Meet me at Aladdin's in downtown Ithaca. We show up, and the very first thing he says, the very first thing, I sit down. He didn't ask me about my business. He didn't ask me about me. He didn't ask anything. He said, Nick, do you like sales? Do you consider yourself a good salesperson? And he had this kind of shit-eating grin on his mouth, on his face, and I could tell he wanted me to say yes and needed me to say yes, but I was honest with him. I decided to be honest. I was like, no, like I don't like sales at all. It's uncomfortable. I don't like picking up the phone. Like it's not what I'm good at. I'm more of the operator. I'm the person at the whiteboard. I'm the visionary. I'm the leader. I just did this word vomit of what I was good at, right? And he kind of smiled and laughed. And I think Rick, you've read this, so you know what he says. But he says, Nick, if you don't like sales, you need to go get a job right now and forget entrepreneurship.
Yes.
And I was so deflated and shocked. I was frankly shocked. I was like, what is he talking about? And he said, Nick, there's a couple things that are true in life. Number one is that every single person in this world is selfish, and they won't do anything unless you convince them that it's good for them to do, and their life will be better if they do it. And number two, every single aspect of being an entrepreneur or doing anything with high earning potential, frankly, in this world, involves sales. And he went on to say, like, Nick, and he started asking me questions about my business, and he said, okay, you're 22 years old. You want to go do these pickup and delivery stores at these colleges. How are you going to convince somebody who owns a warehouse in Boston, Massachusetts to lease it to you? You got no credit, you got no cash. Your business is less than a year old. How are you going to convince them? I said, sales. How are you going to convince the box supplier to sell you a bunch of boxes and give you credit, because you got to have the boxes before you get paid? How are you going to get that line of credit? Sales. How are you going to convince an employee, somebody who could go get a job at a very large company like Walmart, and their check is not going to bounce, and they're always going to make payroll, and it's a very clear, stable job? How are you going to convince somebody to come be a laborer for you on one of your crews? And then what about your customers? Like, you're brand new. There's Big Red Shipping and Storage here in Ithaca. Why are they going to pick you over them? It's sales. It's like, do you see the pattern, Nick? It's like every single part of your life, 24/7, as an entrepreneur, is sales. So you can accept it and you can get good at sales. And he went on to give me words of encouragement and tell me that I could be a good salesperson and what I needed to do. But it was a very eye-opening meeting for me. And I walked out of there very deflated and dejected. And part of me was a little bit stubborn. I was 22, I was defensive, and I said, you know what? He's wrong. I can do this without it. Luckily, Dan Cohen had sold a foundation repair business for almost $10 million, a sweaty startup, right? He wasn't in that tech mentality of starting tech businesses only. He ended up being still a very close friend of mine. But yeah, that meeting, I left and walked away from feeling different And luckily, I took it to heart and I listened to him, and I became good at sales because it's the key to all of this.
It is. And that willingness to be awkward or to put yourself in an awkward position, that's really what I think sales comes down to is assume like the most simplistic format where there's two people sitting across the table. It seems that the awkwardness, the person that can handle the awkwardness the most usually wins the negotiation or the conversation. And the more awkwardness you can interject into the two-party conversation, the more one it never dissipates. It always accrues almost entirely to one person who can handle the least. And generally, it's the salesperson that can handle that awkwardness, that rejection the most easily.
Entrepreneurship is about getting comfortable in uncomfortable situations.
Mm,
If
that's
you
good.
can be, if you can be and get comfortable, you don't have to embrace it. You don't have to like it. I still get uncomfortable when I'm logging in to a meeting where I know I got to ask somebody for money. I still get uncomfortable when I got to let somebody go. There's a lot of really hard things you have to do as an entrepreneur, or when you got to call a customer and tell them that you can't deliver and there's a problem, whatever it might be. But if you can just get comfortable doing it, and the way to do that is through repetition and practice. The stuff is the problem with entrepreneurship is that there's so much media out there about quick fixes and tips and oh, this is a quick way to scale and grow. And there's no shortcuts. There's really not. There's no shortcuts. Like the way to get better at all this stuff is to get in the gym and lift the weights. You want to look like Arnold Schwarzenegger? Can't do it by watching YouTube videos and ordering creatine and writing a workout plan and reading books about Arnold Schwarzenegger. Got to go to the gym and lift the weights.
Yeah. I think you said that it was 8 years before you constructed that first self-storage, like sort of 8 years of training, operations, running business. Uh, in Robert Greene's book Mastery says that generally the apprentice period is like 7 to 9 years. I think is what he says
Mm-hmm.
there. So I think that's probably very, very accurate. It kind of takes you seven plus years to have a clue about what's going on. I think a lot of the guys they want to skip that phase and go straight to raising the capital.
Yeah, it's if you want to have an outsized advantage in this world, be willing to just stick with something when it's not fun anymore. Business is really fun when all of a sudden you have a logo and you have a new website and you have a truck and you have that first customer and you're running around and things are happening quick. Well, 3 months in, it's not fun anymore. Like you've been working 60-hour weeks. You're out doing things that most people of your where you're headed, your goals, they're not doing, right? You're taking a step down from an ego perspective, and it's hard to fight through that, man. It's the dip. One of my favorite books is The Dip by Seth Godin.
Yeah.
And he talks about how look, everything's really fun and exciting at the beginning. And then it's not for a really long time before it starts to really succeed. It's those 7 to 9 years, I think.
Do you have this mentality that you're going to have like an undue quantity of failures, like whether it's like a new business or like going after certain clients, like because like for me anyway, just experience. I don't think there's a right or wrong answer to this, sort of a preference there, but from my perspective, like I've got to try like 90 things to get one thing to work. It
Yeah.
just it just seems like I just got to beat my head against the wall. Maybe I'm not smart enough to ingest that feedback through those multiple iterations sometimes, but it seems like I've got to go through a lot of reps to get there. What is your thinking? Are you more optimistic in your own life?
I've been phenomenally blessed with my success, just generally speaking in life. I have, you know, I ran track and all of a sudden I was almost a state champ. And then I went to Cornell and I was an Ivy League champ and I found a beautiful wife and I started a company that ended up succeeding. So all the big things, like I haven't been through like the trauma and the really difficult things that a lot of people go through in life. But yeah, like every single day we are testing things that don't work, whether it's a digital marketing campaign, a new employee, a new offering, a new business. Like I started, I've owned equity in 11 different companies. 3 of them are doing really well and getting really big. Another 4 have potential, and we've shut down 4 of them because they failed. They failed.
Yeah.
So yeah, you got to take shots.
Do you ever sometimes sort of daydream about what you could possibly become if you went through one of these great life-changing struggles? Like if you had like a close death or a disease that just sort of ravaged you, or just like some like monumental type of pain in your life, do you ever wonder like how great a man you could become if you went through something like that?
I do. Yeah, it's what people go through is really, life is really hard. Life is hard. Like it's hard for everybody. It's hard for the people who win at life. It's hard for the wealthy. It's hard for the poor. Obviously, some people have it a lot harder than others, but yeah, man, like it's it, it forges you. You get forged through fire when you're used to very, very stressful situations. And I've had some very, very stressful situations in my business career.
Yeah, yeah. Um, so walk me through. So we've let's say we've found one of these sweaty businesses that we want to get into. We started up. We hire a few folks. At what point are we looking for maybe that other investment? We're looking for something outside of that regular business. Like, is there employee headcount, revenue level? Like, where are we going after
Yeah,
that?
when we did our development, our real estate development, we had a business that was doing about 1.5 million a year of revenue, and we had about 500K in the bank saved up from previous years' profit. Me and my partner,
Great.
and that still looking back was not enough to do a $2.6 million deal where we had to put a 500,000 in, and then we went over budget and had to come up with another 100 grand, and all of a sudden our bank account is, you know, very, very, very low towards the end of a massive construction project. That is not, looking back, that was probably not responsible, but I'm glad I took the risk. But yeah, it's I talk out of two sides of my mouth on this because I hear so many great entrepreneurs and I see so many great entrepreneurs who say do one thing and do it well, and their stories back that up. They've done one business their entire lives and they've been phenomenally successful. On my story is that I'm very lucky that I got distracted and went and built that self storage facility. I feel very blessed. I'm lucky every single day that I did it. So I think it all depends on the business that you're in. If you're doing a mobile car detailing business or a power washing business or something along those lines, yes, that should be a stepping stone to a bigger business. Or if you're in a property management company, you want to find a way to leverage that property management company into owning assets and owning, parts of the real estate. So yeah, I think business is all about momentum. It's crazy how much it is about momentum. It's a snowball. And when you're first starting out, that snowball is on top of the hill and you're trying to roll it and it's not accumulating much snow at all. But 5 years in, all of a sudden you have some momentum. You have that network, you have the cash, you have a business model that's working, and now it's picking up steam even faster. And yeah, when you're 10 years in, amazing things can happen.
Yeah, yeah. Do you happen to know Chad Griffiths?
I do, yeah. Industrial.
Yeah, yeah,
He's a
yeah.
he's a, he's a great friend of mine.
Oh, great guy. I actually did a podcast with him last week, so it'll come out in a few weeks. But
Oh, cool.
um,
Yeah, I was on
I,
his show maybe a month ago.
okay, I thought I saw that. I thought I saw that.
Yeah,
So he's
yeah.
got this. We were having conversation about the exact same thing you just mentioned about like if you have a property management business, how do you get some equity out of
Mm-hmm.
that? And that's actually how like one of the early steps that I use is I converted my fees into equity. I said, okay, look,
Mm-hmm.
you're going to pay these fees to somebody anyway. Like, I'm just going to roll these fees. And the benefits to that and being willing to do that. First of all, you got to be able to stomach the pain because
Yeah.
some of these projects you're going to work a year or two. So, for instance, um, I sat down. I'm going to say this. I don't think anyone's going to do the homework on this. I'll just. So there's a 48-story building in a top four downtown right now that is completely vacant. And our managing director was trying to close like a redevelopment agreement with this family office that owns them for weeks and weeks and months, and we just couldn't get closed. And I told them like they're based out of New York, and I said like, look, I'm going to be up there for Christmas. They're not Christians, so I'm just going to go see them the day after Christmas. I'm going to be up there anyway. So I went to go meet with them the day after Christmas, and the guy, I sat down asking him about the guy's family. That's what I always just kind of tell you about your kids, that sort of thing. And he was like, no, let's just get down to business. So we took out a white sheet of paper, and over about a 10-minute period, we drew just kind of a framework of what the structure would look like, fees converting into equity, for all these different things: redevelopment, raising capital, leasing, construction, condo conversions, everything. Frameworked it out. We both agreed to it verbally. I took a picture of it, sent it back to the office, They typed it up in LOI, they sent it back over, and they signed it, and we got the deal. We got the deal. We still have
Amazing.
we still have the deal. But the ability to be able to convert fees into equity is incredibly powerful. Incredibly powerful. I've personally made millions off of doing that over time. But the opportunity always comes up when you really need that money as a fee.
Yeah.
When you're out of money and you've got that fee coming in, and then you roll that fee into equity, especially in commercial real estate, there's an opportunity there. But anyone that's like an attorney, or someone that's doing like accounting work, auditing work, that's on transaction side, there's always that opportunity there.
I think life, especially real estate, is an adult marshmallow test. You know what the marshmallow test is?
Tell everyone, yeah.
The marshmallow test is where they put a kid in a room and they put them on a stool, and there's a table, and you put a marshmallow right on the table in front of the kid. And you say, okay, look, I'm going to be back in 5 minutes. This is like a 3-year-old, right? I'm going to be back in 5 minutes. If you eat that marshmallow, good, congratulations. But if you don't eat the marshmallow, I'm going to come back and I'm going to give you another one. And they record it. There's video cameras, and they're watching these kids try not to eat the marshmallow because they know that there's a reward down the line, right? And so much of life, so much of entrepreneurship, and most of the kids eat the marshmallow. And it's really funny that like it's directly correlated to future success and ambition is their ability to not eat that marshmallow. So the kids who don't eat the marshmallow are more likely to earn more money down the road. They followed up with them in studies. It's amazing. But yeah, like, are you willing to forego pleasure today, which is fee income in your bank, for money 2 years from now? 99% of human beings would say, no, give me the money now.
The money in the future. You're always taught. I don't know if you're taught in college, like to always discount money back to the present value.
Yeah.
And like the math says, you take the money right now if it's the same amount of money. But always that delayed gratification usually pays off. And I would say almost always pays off.
I think there's nothing better than what happens with well-managed real estate over time. Most businesses, operating companies, I'm involved in operating companies where it's a race all the time because our competitors are right on our heels. We're always running after our tail. We're always chasing that next customer, and it's a race. Like, if we're not innovating, you're dying. You have a great piece of real estate and you keep it clean, you answer the phone, you take care of it, you keep enough money in the bank to handle your debt obligations. 10 years go by, spectacular things happen almost every single time.
Yes, yes,
That's why it's such
yes.
a great business. So I'm trying to distract myself. Generally speaking, in my career, I'm trying to distract myself with anything but selling my portfolio.
It's a good place to be. Side question. Storage wars, fan or not a fan?
It's entertaining, but I'm not a fan because I know it's all fake, unfortunately.
It's all fake.
Yeah, every single episode is fake. They plant things in the storage units.
Oh, that's so sad.
Yeah.
I introduced my kids to storage wars like last week because I knew
Yeah,
this was coming up.
don't tell them
Okay.
it's fake. Don't tell them it's fake, but it is. The best thing we've ever found in a storage unit was a bunch of old art clay projects that looked like whole stacks of blocks of cocaine. And we opened this door and we're like, oh my God, this is millions of dollars worth of cocaine. We never would have had the guts to try to do anything. We would have called the police right away. But we look a little closer and it's old like potter's clay bags.
Oh my. That's good. That's
It's funny.
good. You have this interesting little, I think it's like a couple of paragraphs in the book talking about the importance of geography, that when you guys were looking for somewhere to move, I think, you were looking for one thing, your wife was looking for, churches was number one on her list, and you're looking for schools or whatever might be your business environment. Um,
Mm-hmm.
what is the importance of geography selection?
I have a pretty unique view, a controversial view that people don't do nearly enough optimization for where they live in the world, or even in the United States. Like, I would never move out of the United States. I just think the government is too business friendly, and we have freedom here, and there's so many things that we have going for us. There's a lot of things wrong with it too, but you can live anywhere in the United States that you want. I lived in Southern Indiana in a very rural hometown. It was an amazing place to grow up. Great people, but there were 8,000 people in my town, and there were maybe 3 or 4 companies in the entire town that did more than $10 million of revenue in the whole county. So was I going to go back there and try to build a career and hopefully make 100 grand a year, when I'm 40 years old, or am I going to go out and try to mix it up and do something? So I went to school in Ithaca, and I found myself in Boston, a great town, high energy. We had a ton of fun, but it was snowy and people were rude and it was phenomenally expensive and the traffic was terrible. So me and my wife are like, maybe we don't have to live in Boston. Let's go. So I made a list of things I loved. She made a list of things she loved without showing each other. And on my list, it was, uh, you know, golf, good weather, no traffic, airport nearby,
That's right.
craft beer, college town, just a bunch of, I don't know, I was, 27 years old.
Yeah.
On my wife's list, it was like family friendly. She wants other people to have kids. We were in Boston and nobody had kids. Nobody had kids. We had kids and all of our friends looked at us like we were crazy. She decided to be a stay-at-home mom and she got bullied by the other women because it's just not what is seen as socially acceptable in Boston. So, or at least in our network, right? So on her list, it was, yoga, family friendly, great churches, warm weather. And then at the bottom of our list was like, where can we buy a house for under 300 grand?
Yeah.
And we found Athens, Georgia, and just moved here. We didn't know anybody in the whole state.
Wow. Wow. We we had a similar type of landing here in Houston. So I'd started the business a number of years beforehand. I was 3 hours away in Corpus Christi, and my wife she got her master's one semester before I did. And so she got a job offer with PricewaterhouseCoopers doing
Yeah.
auditing in Houston. And she said, you want to go? I said, yeah. So I dropped out of, one semester before I was getting my master's, dropped out of there and actually expanded the business to Houston. Didn't know anyone.
Who needs a
Biggest,
master's anyway?
biggest, excuse me?
Like I said, who needs a master's anyway?
That's right. That's right. Well, so here's the ironic thing. You're like one of the handful of people that would enjoy this. So I relocate the business. We expand in a number of other cities. I'm in my mid 20s and I have 300 or 400 employees by this time. And I go to apply for the executive MBA at Texas A&M, big public school, executive MBA. I thought, no problem, no problem. And by the way, um, I think I was maybe I was chairing a board with like people in like several dozen countries by that time. And so I'm thinking, no problem getting in. I just need
You
to
didn't
finish
get
my
in?
master's.
They didn't
I
let you
didn't get
in?
in. They didn't let me in. They rejected me. They accepted all 50 of the Exxon oil and gas engineers, but they rejected me. So so now I know like I know a lot of the board members and their biggest owners at Texas A&M, and I remind them that every single time I see them. You guys rejected me, so every time you guys call ask for money, I'm going to reject you.
Yeah. I think that's very I wouldn't give them money either.
No, no, no. So,
if
but
I think that like that's the big theme of my book. Like, look, like nobody's going to give you permission.
yeah,
Nobody's going to give you permission to do anything that is that has abnormally high chances of outsized success.
yes,
If I would have at Cornell, I studied whatever I could get into to run track, and I just tried to get out of there. If I would have tried to go work for Sam Zell or a real estate private equity firm in Houston or in Atlanta, I would have been turned down. They would have said, no, you are not qualified. You did not come from a real estate family. You did not do an internship here. You did not study real estate. You didn't have high enough scores on your whatever. They would have said no. They would have not given me permission. But now I own a real estate private equity company. Nobody gave me permission to and said, oh, Nick, that sounds like an amazing, great idea to buy a $52 million company and raise $20 million worth of equity and borrow another $9.5 million from the seller. Yeah, Nick, like 4-year-old business, no problem. Like, go buy it. That sounds like a great idea. You're perfectly qualified to do that. No. And when I was trying to raise money for that first self-storage development, it was dinner table to dinner table to dinner table to dinner table, 100 plus of them, and I raised money from 5 people. 95 of them told me that they didn't have the money. It turns out I was going after the wrong type of people, but most of them said I don't think it's going to work. Like, You're 20, you're 24 years old. This is crazy.
Yeah. What raising capital is so difficult. You have like a little pitch framework in your book as well,
Yeah.
about sort of like the three or four like major things you're trying to cover there. Um, maybe I don't know if you got a chance. Maybe walk us through sort of what your
Yeah.
pitch framework for people trying to raise capital. I thought
So
it was
it's
incredibly
yeah,
enlightening.
it's kind of my mentality around sales applied to raising capital. And a huge part that people get wrong in sales and raising money is that they come in and all they talk about is the positives. I'm a great storage operator. We are the best, it's the best business in the world. It's recession resistant. All the things they say about self-storage. I could have just went on these calls and preached it and preached it and preached it. But I like to kind of turn the tables a little bit, especially during an investor call, and say like, okay, let's be realistic. There are some things in this business that we cannot control. I can't control if 75,000 square feet of storage gets built right across the street, right when we get done. I can't control it. That's a risk that you and I are taking together. I can't control interest rates. It's 2021. Interest rates are 3.5%. What if in 2025 interest rates are 7.5%? I'm going to miss my pro forma projections. We're going to have to pause capital distributions for a while to get a refinance done. We're going to be stuck, instead of a 5-year timeline, we're going to be stuck in a 10-year timeline together. I had these conversations in 2021.
Smart.
And at the end, I'm like, okay, like knowing all that like what I just told you about these risks, about how things can go wrong, about how this timeline could be a really long timeline. We're not going to flip this thing. Interest rates we can't control. Why do you want to invest in storage? Like, what makes you think that this is potentially something you'd want to do? And you be quiet. And what happened a lot of times was the person said, wow, you're right, this is not the right thing. And I just saved myself a lot of stress because our circles didn't overlap. We're not right for each other. But more often than not, they would spend the next couple minutes on the call literally talking themselves into it. So yeah, I think not enough people build trust in sales calls and are realistic. They're not realistic about what could go wrong when you're building a house for somebody or remodeling something or doing a job for somebody or raising capital. People aren't foolish. Like, they know when things are too good to be true. So I love to be very straightforward about what could go wrong, about what I'm worried about and the stress. And it builds trust, and people really appreciate that.
I think choosing the wrong investors or taking capital from the wrong people, would certainly be one of the top 5 mistakes I've made over the last 10 years. Easy.
Just stress, like just not good people, didn't have the same plans, the same values.
Yeah, I just never had that. I never thought to have that conversation going into it, right? You're raising capital is so difficult in the first place.
Yep.
Like the idea that you just presented is just so contrary because no one wants to put the friction in the sales process.
Yeah, and when you're desperate and you really need their money, it's even harder. It's even harder.
Yeah, yeah.
Um,
How did you raise $20 million for this equity purchase of
yeah,
somewhere?
yeah,
That's a for people that don't know, like 20 like raising $2 million is incredibly difficult. Raising $20 million is just completely insane, especially for something outside of your traditional domain of commercial real estate.
yeah. It's something that I had no experience in. I'd never bought a company that size. I'd never controlled a company even half that size. I had never raised capital to buy a company like that. So yeah, it took a lot of salesmanship to get the deal done.
Yeah, yeah,
took a lot of meetings, but yeah, I put kind of a carrot, less promote, less carry for me if they invested more capital. So if they did over $1 million of capital, they got better terms than if they did under $1 million of capital. That was kind of one of the really smart things I did, so that instead of folks limping in with 250 grand or 500 grand, which is still a ton of money, I needed big checks to get 20 million raised. So yeah.
yeah, yeah. I think that's one of the key things is, a number of years ago, I stopped taking checks under 1 million, and
Hmm.
that really made things. They talk about, like a like not a, you don't want a very deep cap stack or capital
Yep.
table. You want as few investors as possible. Makes your life so much easier.
Yep. Yeah, you kind of think the other way of like, hey, the more people I can get involved here, the more word will spread. The deeper my bench becomes. But yeah, I have a goal. I have a goal eventually to be my own LP and not have LPs. We're a long way off from that. But yeah, there's a new, like, I'll tell anybody who's considering raising money. Anybody who's considering raising money, there is a different level of stress. It's different, and it is more intense, and it is more worrisome when you have other people's money. People think, and you read that, oh, if you raise other people's money, like, you can be careless, you can be free, who cares? That's not me, and it's not anybody that I've met really. When you have other people's money on on your hands and you are looking out for it and being a steward of that capital, it's way more stressful than it was if it was just your own money. It sounds crazy, but it's true.
Certainly is. So I want to talk a little bit about like cities, like where are you finding these investors geographically? Because for instance, one of the reasons why I was okay with moving to Houston was that I had read this book in college by a guy by the name of Rabbi Lampin, I think was his name, where he talked about the idea that all Jewish families tell their kids to go to the biggest city they could possibly find because that's where wealth and competency accrue, and their opportunities are better in larger cities there. So I just always had a natural proclivity to want to get to the largest city possible there. But like from your experience raising capital from these investors, are you going to the major markets? Like, are you going to New York and to Miami and to Dallas, or are you finding those sort of in these interesting like smaller geographies?
Yeah, so we have 320 active investors now. Um, a lot of them in Athens from my personal network, that I've met around the golf club and wherever, at church. But yeah, I think if I think through our largest three investors, one is in New York City, one's in Dallas, and one's in Houston. There's a lot of money. There's a lot of money in Texas.
Yeah,
That's for sure.
yeah, yeah.
But then
It's
there's a lot of successful people who run a business in, very small town Oklahoma, an airplane transport company, in Florida we have, but they're almost entirely entrepreneurs. Either they have been entrepreneurs, or you know their parents were entrepreneurs.
Yeah, and for people interested in these sorts of things, so these family offices or these families that are wealthy enough, they have staff that just manage their lifestyle and their investments. If you look at family office concentration, New York City has the number one in the U.S. They've got something like 330 established family office, like single family offices, number of multi-family offices there. Dallas has a large number, and so does Houston. I think so does kind of southern LA area as well. Obviously, Miami does, but those three cities you just named are the three cities I spend most of my time in. Is in New York, Dallas a lot, and then Houston.
Yep,
Yeah,
and I think in Texas, since the oil business is so volatile, and that's where so much of the wealth came from in Texas. I think the appetite for risk in Texas, those boys, they'll do some very creative things.
they will. They will. They will. Well, and it's interesting because people haven't been able to outlay the quantity of capital that they need to over the last 2 or 3 years in some of these sectors. And so, for instance, we have a large Japanese group that's trying to place some capital with us for like the last 3 or 4 years. And they're saying, okay, Rick, we've got to do 15 million per property. I'm like, well, per property,
I don't have that many deals.
yeah. I can't do 15 million per property. I can't buy a $30 million property because how am I going to improve it? Like, and then the next year they're like, okay, we didn't make our capital allocation mandates last year, so now it's 30 to 45 million per property. So all of a sudden, I've got to switch my selection process, and I'm looking for $90 million assets for them, which and of course they want us to come up with 20 or 30% of the capital on that. And they'll take the rest. Can't do it. And so now they're giving me outrageous numbers. They're giving me like 75 to 100 million per property. And the only thing that you can do with that is like, downtown condo, high rise, or SFR, single family rental. Those like really your only two options these days. Because even like a logistics center, you're not building, $250 million logistics centers.
Yeah, yeah. I think, and once you start playing in that dollar figure, the big boys are there, the Black Rocks and the big groups. So yeah, it gets hard. Like finding, I think the one advantage that a entry level or a beginner real estate entrepreneur has is their ability to just do smaller creative deals. And man, I know, Rick, that some of those early deals were so small, I wouldn't look at them now, but they were really profitable, really profitable. But we had to get out and do a lot of the dirty work at the very beginning. You know what I mean? We bought a $600,000 self-storage portfolio, 3 properties up in northwestern Pennsylvania at auction. And we were able to put some bank debt on top, and we only put about 120 grand of our own cash into that deal. It's worth $2 million today, and I don't have investors. Those little deals, like the big dogs, are all going to overlook that all day.
Yeah, I think you're getting ready to have another probably a 5-year run at least, because you've got bonus depreciation, potentially permanent bonus depreciation, on the very near term horizon. Probably, I think it actually goes back to January of this year, for any new acquisition. So, I mean, you're going to be in a great place going forward, and so your investors. I think a lot of people don't understand, like people that aren't in the real estate business. You really only have two different advantages for real estate. You have depreciation and appreciation, and the depreciation sometimes is worth a whole lot more than the appreciation, unfortunately. But
When
yeah,
you
I think
can,
you're good.
with 100% bonus back, you can invest, 300 grand of equity into $1 million project, and you can get a $200,000 or $300,000 year one tax deduction. I don't think
Yeah,
people understand how powerful it is that every dollar, almost every dollar you invest into real estate, you get a year one deduction. Unbelievable advantages. And I think the third thing that makes real estate super special is the debt. The access to debt, especially in the multifamily and some of these, where there's some government sponsored debt,
yeah,
it's unmatched compared to operating companies.
yeah, yeah. Tell me about your relationship with personal guarantees, kind of starting out and today. So
Yeah, do you want me to kind of give you the rundown of the last 3 crazy years of our
yeah,
lives
yeah, yeah,
and
yeah.
deals?
And I have personal guarantees in place right now too. So don't,
Yeah.
yeah,
So we personally guaranteed every single loan that we've ever done in real estate. So yeah, that's $70 million of personal guarantees. 60 of it was in 2020, 2021 on 3-year term loans with a bank up in New York, floating rate. So when rates went from 3.5 to 7.5%, it was crazy. Like our debt service doubled in price, and that's the number one expense that you have as a business. So or as a real estate business. So yeah, it's I'm proud to say, very proud to say, that we refinanced and replaced all of our debt across our entire portfolio with no cash in. But man, it was stressful. It was very stressful.
wow,
We
wow.
just closed. We just finished the last one about a month ago. And look, we had 19 active deals. 5 of them were not distributing for like a year. One of them is still not distributing. But yeah, we've been able to fare a lot better than a lot of groups, considering the environment.
Are you mainly using syndications, or are you using funds at all?
We've elected not to do funds. I would like to do a fund. I probably will do a fund, but we've kind of played the individual promotes. Why we like doing deal by deal is we can get into the promote on a single good deal. Um, and I know you can arrange funds to accomplish that same thing. But what I mean is, if you do a fund and you syndicate the fund and you sell an asset at one of your best performing assets, you still have all that capital out that you have to return before you're into your promote or your
Yeah.
profit interests. So you really only get into the profit when you start to liquidate those last 5 or 6 assets in a fund, or 2 or 3, or however big the fund is. But if you go deal by deal, and we buy one deal in Connecticut, it's a $5 million deal. We have a 30% promote on this one deal. That deal goes phenomenally well, and another deal goes average. You don't have to sell them both together and cancel each other out. You can sell the one where you're big time in the money in the promote and get paid. Does that make sense?
Yes. Yes.
Have you
Uh,
done mostly, you know, funds, or do you guys syndicate deal by deal still?
we have the things that I own by myself, are almost all, I mean, everything else is a fund.
Hmm.
Um, and well, like for instance, like the 150,000, it was supposed to be 180,000, but then the county got involved with like water retention. So down to 150,000 square foot development there. We're going to do 3 of these, and then we're gonna roll them into a master, logistics fund.
Okay,
Some of them, yeah. So we take syndications and then roll them, after 2 or 3 into a fund to
that's a
sort of
really great.
seed the fund.
It's a really great way to do it, and It's so complex. But yeah, you can literally, for those listening, you can lay out deals so that you build it for this fee. It's all rolled in, or however you want to structure it, and it's sold at a predetermined amount into the fund already. That's a larger holder. So yeah, one of the beautiful things about real estate is the way that you can creatively structure deals.
Yeah, and I think right now even the SBA changes to the SBA loans, from what I hear, you used to have a $5 million cap or $5.5 million cap personally. Now the cap is on like NAICS code, so on industries. So someone that was entrepreneurial could get and get $5 million loans to go buy three operating businesses, then roll the three operating businesses into a fund and do the exact same thing.
Wow, that's a really good point. Yeah, I remember when it was 5 million per person across any real estate asset class, any business. It's all you could have. But I didn't know that they opened that up. That's great.
Yeah, I think I heard that a few
Hmm.
months ago. I'm not sure if there's like a lifetime cap or something like that on it, but I know it's
Hmm.
pretty attractive these days.
Yeah. Well,
Uh,
it's great. I mean, that's the beautiful thing about America is that the tax code and the government is pro industry and pro capitalism.
yeah, yeah, definitely, definitely. So, all right, so kind of give as we begin to wind down, give people kind of an idea about um, they're wanting to make a move. They're in a maybe a well-paying job, and I think I saw you tweet a few weeks ago the idea that the worst possible position would be the guy that's making $150,000 a year. He's comfortable, but he can't take that risk to make that jump there. So I guess maybe talk to that guy. Like where do you go if you're comfortable where you are, but you have the capacity to do more?
Yeah, my first question is always, and look, yeah, you're right. The most addicting thing in the entire world is a W 2 income because once it's coming in, and you have kids, and you have a house, and you have a car, and you live, you cannot live without it. You cannot live without it. It's the most addicting thing in the world. So getting out of that trap is really, really hard. I did all this and I got started as an entrepreneur before I had that money coming in ever from a job, and kind of stacked up some expenses. I was 20, a little over 20 years old when we started this stuff. So my first question would be like, what are you willing to sacrifice? Because you got to sacrifice something. If you can't give up your W 2 job yet, which I very rarely recommend people just go and quit their job, you got to sacrifice your nights. You got to sacrifice your weekends. I talk to a lot of people nowadays who, say they're 35-year-old male, and they say, oh, Nick, I want to take the next step. I want to start a company. Here's kind of the niche that I want to do. Here's how I want to go about it. And I started asking them a couple questions, and it turns out they want to, they have their church group every Tuesday night. They have baseball practice every Wednesday. They play golf with their buddies in a Thursday night league. They go to church every Sunday. They do family day on Saturday where they take their kids to the park and do little league tournaments or whatever it might be. And I'm just like, okay, man, like, what are you willing to sacrifice? I'm not one of those hustle, hustle, hustle nonstop kind of guys. I'm not a guy that works 80 hours a week. I don't think you need to do that to succeed. I'm not going to just tell you to hustle more and work all the time, but you gotta get some cash coming in. You gotta trade your time for money. You gotta go out and get some cash coming in. And when it's $3,000 a month, $5,000 a month, and you got some clear trajectory to take you to 8 or 10 where you're earning now, and it's less risky to make that jump is when you do it. So yeah, it's never easy, but for the people who kind of get ingrained in the stuff outside of work, it's even harder, I think.
The younger you are, the more risk you should take, it seems like. Because I did the same thing. I was young. I didn't have any kids. It was easier to make that jump without that W-2 income there.
I really like to do an exercise called fear setting, though, and I think this is a good kind of parting thought. If you're about to take, and I picked this up from Tim Ferriss. I don't know if it's in 5 Hour Work Week. I think it is in 5 Hour Work Week, which I go back and read every now and then. You're about to take a chance in life. We were about to build a big building. Our budget when we started was 1.9 million. It ended up being 2.5, but we were about to build a big building. We had a little bit of cash aside, and a lot of people, like my father-in-law, my wife's father, some other people, were just like, Nick, like, are you sure? Are you sure? Like, this is crazy. What you're about to do is crazy. Um, I did the Tim Ferriss fear setting exercise. I put a piece of paper in front of me, and I literally wrote down word for word what is the worst case scenario. The worst case scenario. And at the bottom of my page, it didn't take me long in the real estate business to write bankrupt really big, because that's the worst case scenario. Is It gets half built. I lose all 6 investors' money. I lose my own equity. I've wasted a ton of my time, and I got nothing to show for it. Not only that, but I personally guaranteed the loan. So I have to file bankruptcy. They take my other company. I don't own a home. I don't. I own a cheap car that's paid for. I don't know if they can take that, but if they do, bankrupt is at the bottom, and I'm in my parents' basement. And then I'm back at it. I'm trying again. So I ended up building a building, and now it's worth, $8 million. But if it would have went the other way, I could live with it. And when I saw it on the paper, okay, I live in America, like bankruptcy is recoverable. My parents aren't wealthy, but I'm not going to go hungry at all. I don't think my wife's going to leave me. I talked to her; she's not going to leave me. Okay, let's go.
Yeah, that's right. If you have a wife that's not going to leave you, you really have everything in life. There's nothing else that you really need.
It's so critical. I've seen folks who have, I wouldn't say non-supportive, but less supportive relationships, and I think it's very hard to build a business. It's almost impossible to build a business when your significant other doesn't see the vision.
Yeah, that's right. That's right.
My wife
Well,
supported me in the early days.
I have a very expensive wife because she supported me in the early days.
She made a wise investment.
She did. She did. Well, all right. Well, tell folks like where's the best place to pick up the book, and then also the different avenues to keep track with you and communicate with you. Because I know you got a lot going on with especially with the podcast and newsletter and the book in
Yeah.
business.
So if you pick up the book, we're doing something where we started an online community for people who bought the book. So if you buy it and you send me a DM or an email, nick@sweatystartup.com with your proof of purchase of the book, audiobook included, you get to get in that community. It's a great place to start. There's a lot of other entrepreneurs, a lot of people reading the book. But yeah, follow me on Twitter @sweatystartup. You can send me an email, nick@sweatystartup.com. If you want to use somewhere.com, I can hook you up with a discount if you email me. But yeah, I'm pretty easy to find. So thanks. It was really hard to write, but I'm really proud of it. So I hope people get a lot out of it.
Yeah. Yeah. Well, I highly recommend everyone pick it up. Is Amazon the preferred place to buy it, or is there somewhere else that you'd prefer people to go?
Yeah, it's in Barnes and Noble. So if you stop in Barnes and Noble, that would at least make them feel like they made a good decision putting it in the bookstore. But yeah, you can order it on Amazon. Listen to it on your commute to work.
Folks, we have directions, we have instructions there. So that's good. That's good. Hey, Nick, thanks for joining us and sharing a bit of your knowledge. I really appreciate your time.
Rick, I love your message and your mission, man. Keep it up and let me know if I can ever help you with anything.
Sure appreciate it. All right. Thanks, everyone.